Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian own nothing, control everything. Just want to thank you for tuning in live, listening to replay. This is episode 359, High Net Worth Investor Conference Review. This is a 2021 episode. Appreciate everybody for tuning in live, listening to replay. Always appreciate everybody that can get on the episodes live. If you'd like to hear the episodes live or get the notifications, just click the like and subscribe, the bell. It'll give you the notifications of when we actually go live. Definitely looking forward to this episode today. So, definitely really excited about the review that we have for this particular event because there was a event that we went to, and you always see, the environment comes down to what people like to always say: relationships, invested in relationships. Are things so transactional or is it relational? How well can you get it to be more focused on relationships as opposed to transactions? So we always go into the environment knowing that, relationships reign supreme. It's about who you know, having the right team, having the right projects, meeting the right people that are focused in on your particular set, whether it's an investor set or deal set, and things of that nature. And so today we wanted to do a review of a conference that we attended recently. A lot of people ask us about these high net worth investor conferences, and if you could just give us, a review of what is it that you see, what is it that you're hearing. Obviously, you know, this is a content platform where, we have those business conversations. This isn't legal advice, it's not financial advice. It's conversations that, we're having even in a high net worth investor environment. So, just to go through some of the things that we talked about in the environment, when you see the environment, you're going to be pretty consistent across the board. But when you have people coming from different jurisdictions, you're going to see differences. You're going to see people traveling from different states, different countries, because they're looking to diversify from their locale, from their local geographical region, and really be in a position where they are in a different geographical region. Hopefully, it's in an emerging market. Hopefully, it's in a developed market. Hopefully, it's in a good legal market that people can come in and things can get done very efficiently, effectively. You didn't see as much citizenship by investment to other countries. As you've seen in the past, you don't even see people really talking about as much, even sometime in the high net worth investor environment all the time now. It's citizenship by investment. You've kind of seen that go down. It was the tea of the day for years now. It's been the tea today, but just didn't really see it recently. Uh, a lot of the things that you're going to see in high net worth investor environment is always going to be some type of real estate portfolio. You're seeing people in different areas of that, whether it's commercial, whether it's public storage, uh, whether you see people building multiple subdivisions and things of that nature, and even seeing multi-units. Definitely seeing multi-units. Actually, ran into quite a few. Real estate is always going to dominate the day because it deals with that hard, tangible property holding in the portfolio, long-term, generational, things of that nature. And so that's what we see when we see a lot of real estate plays. But you see a lot of these individuals uh, jump from one industry to the next, whether it's them jumping from whatever industry they made millions off, whether it's in IP, and then moving over into a space that they're literally angel investors now, or now they're VCs, and so they're now investing capital as high net worth investors. Traditionally, that means they're making over. We're just gonna say at least a million. Their net worth is over a million. Hard. And so when we talk about even going from when we talk about 10 million and up type clientele, high net worth investors, where is capital moving? Capital has been moving into a lot of the tech companies, of course, healthcare, because the percentage that it takes up in the GDP. You saw some healthcare plays. Healthcare plays were more going along the lines of tech plays. You saw a lot of tech integration into the healthcare market. You're seeing a lot of tech integration into the healthcare market. You're seeing a lot of tech integration into the real estate market. And so to actually hear the high net worth investors say that the real estate was some of the slowest to adopt to the technology, as far as implementing technology, you think about it because of the 2020 situation of people not being able to physically go see, housing and apartments. People were still moving throughout the pandemic, and so people were going and watching properties, looking at properties through virtual, through technology, whereas in the past they hadn't. People were selling houses through the virtual, whereas in the past they hadn't. So you saw a transition in the real estate market where people were less inclined to physically go, but were still acquiring properties by virtual means, and things of that nature. And you saw the real estate forced to be changed to actually focus on doing virtual means, giving some type of virtual display, some type of virtual crafting, as opposed to it just being all physical. So we saw that for sure. And you see that across the board. Now you're getting into IP when we talk about these NFTs, or you're talking about the crypto stuff. You're talking about IP. They're calling them digital assets, and things of that nature, whatever they're calling it. These are things now that we can see. We didn't really even have a large conversation with them about that field. Of course, people are going to sit there and push their narrative of what would be considered blockchain technology. All of these things have been around for years, but at the same time, we still see the old Muhammad Ali type industries that have been around for years still take over, whether it is trusteeship, whether it is whether stewardship, whether it is any of those things. When we talk about trusteeship, stewardship, when we talk about even insurance, they have stewards on the other side. You have asset managers. People say, oh, why would you give your money away to somebody else to make you money? Because you have to have the money make money outside of you. So that's why they have asset managers, whether they're on the insurance side, whether they're on the financial securities side. We see that. So, being in a high net worth investor conference review really showed us that you definitely have to be prepared to make a certain amount of money to be even allowed to invest in certain things. See, everybody thinks that they're making it. This isn't a created equal playing field. It's a competitive playing field. We've asked that previous asset managers for that, about that. They've all told us it's competitive. Why? Because they're competing. It's not for limited wealth. It's for trust. Appreciate Carrollton, Ohio for tuning in live, listen, replay. Always appreciate Carrollton, Ohio for tuning in live, listen, replay. Appreciate the Bronx for tuning in live, listen, replay. Always appreciate the Bronx for tuning in live, listen, replay. People say, oh, do we hear the high net worth investors talking about the Airbnbs? No, because the high net worth investors are buying properties and then starting their own hotel line by starting 5 or 6 or 8 private acquisitions of hotels. So when we see high net worth investors buying small boutique hotels, 3, 4, 5, 10 boutique hotels, and starting their own private line to compete against the major brands, What gives them the courage to go and start a hotel where this so-called new age millennial mentality is, oh, just get a property and rent it out through Airbnb? Is that how it really goes? You just gonna get a property and rent it out through Airbnb? And see, this is the mindset. Oh, we're gonna go this route. But you see, private acquisition of hotels, private acquisition of creating a private line of hotels, knowing that, sure, Airbnb took market share, but it did not clobber these other companies in the respect of the fact that there are people still starting those lines every single day. And even when you even talk to people about residences, where they're allowing people to do residences and also partially some type of hotel or service where they will rent out the room as well when they're not there, or rent out the condo, or rent out the apartment when they're not there. One of the things we took from the high net worth investor conference, was that it's about your team, who's gonna stand in the breach with you. We always see the face of the company sitting on stage. Everyone sees the face of the company, maybe even at the booth. But are those the people actually managing the assets? Are those the people in the trenches? The team? We saw a investor go up, definitely has sold out of IP and has moved into a position now where they're in trusteeship. And you get these guys that in the high net worth investor environment, we're all jockeying for a position. But you got these guys that they have a small piece. And that's the reason why we're in the high net worth investor environment conferences, so we can thought mastermind, as they call it. They share thoughts. They share thoughts of what they know, what they don't know, how they're helping out clients, how they're engaging with the market nowadays, and how we're moving forward into the next year of 2022. We're looking to see how the market, where money is going, essentially. So when we see where money is at in the high net worth investor environment, we see a lot of it in tech. A lot of it is in development of tech. A lot of it is moving in that direction. Partially because people want to get in on the ground. They're calling these companies junior unicorns. So they're looking to catch these companies from $1 million to $1 billion. It might sound like a lot, but it's only 1,000 millions. And so when you see a fund, a major fund, VC angels, they may have $300 million. They may want to fund 25 million. They may want to fund 5 million. They may want to fund a million. Traditionally, they like to fund more because they want to take this company from 5, 10 million to $1 billion and call it a unicorn. So the cup of the day is, can you come out of here in the next 10 years and still throw up what will be considered a unicorn in the society? Can you throw up a tech company? Can you throw up some type of company that is going to so-called change the world? What is it, an app? Some website, some type of patent product, things of that nature. So once again, when we talk about that, in what capacity are you doing that? Are you doing that as the founder? Are you doing that as the owner? Are you doing that as the operator? Are you doing that as the manager? Let's see. What deals did we have? What deals did we have? We got a bunch of deals from this conference. Let's see what the deals were today. We'll share that with you all. Oh, REITs. REITs are the cup of the day once again. If you're looking to, be in some type of position where there's a, even in the timeshare model, there's so much more development in that model, and that's why you see investors actually going over to the hoteler space, to the hospitality space, we should say, so much because the hospitality space is allowing them to to continuously hold real estate and things of that nature. So when we do talk about Airbnb, we're not shaming it in that respect. Let's see what else we got here. A lot of real estate deals for sure. You see some insurance funds. The returns, most of the returns, we haven't seen any returns over 100%. The crypto bandits are always going to say that they're over 100%. But the traditional managers are not talking that. So we're talking here investments in the environment. They're looking to expand the internet. So some people say, oh, the internet's like the best it could ever be. Well, remember, in the high net worth investor environment, we're talking about more of the details of, yeah, we know the internet, but these people are reading out studies letting you know, hey, families actually live longer by having the internet. And they've done these studies and they bring those studies into the environment. So they have a whole business now that's built around trying to what's considered to be create, faster internet, get it to more people, things of that nature, by developing the technology so they can have greater bandwidth. And so, not only are they looking to create better bandwidth because the developed countries such as the states has a very high bandwidth, but when you talk about undeveloped countries, they're looking to take that technology, not have to do a bunch of digging, something that can be fairly wireless, something that can be fairly entrenched into society, the infrastructure. It doesn't necessarily always have to do that. These companies looking to raise $10 million, they got a minimum investment of $250,000. They're giving out convertible promissory notes. So you say, well, what's the point of talking to us about these things if you're not recommending them and things of that nature? We're not. But you get to hear the conversation. You get to hear, convertible promissory note. That's not something most people are used to, but when most people are looking to have a company and they're looking to give away equity, they usually do it through a convertible promissory note. It could be other forms of that, but we're going to just say in this particular case, this company is doing that. It says the interest rate simple, 4% per annum. That's not a guarantee. Don't believe the hype. But nevertheless, there and there, they spent thousands of dollars to go ahead and pitch that deal to you for sure. So don't think these companies don't spend thousands of dollars just to market their ideas. Uh, you got these companies nowadays that, like, sometimes when you go in a high net worth investor environment, you're gonna meet people that they have the experience. So this company right here has 100 years of experience. They're allowing you to come in on a co-GP level, which is rare. Usually GP has money, LP doesn't. GP has money. They're allowing you to come in with a co-GP. What are they looking for here? They're looking to raise some money here. Uh, Nevertheless, their returns are nil. People want to sit here and tell you that, oh, we're giving out some returns. Their returns are less than 10%, but they're allowing you to come in on a co-GP level. Um, So, that's not normal. Usually, you don't come in if they're asking for capital, even at all, from that level, having the access to the deals. Um, when they're selling deals off to investors, they usually that's considered they're not a broker. They're just a company that's allowing people to come in on deals at a co-GP level. So we were joking with the individual because it's almost like they're trying to feather their nest with a equity, not buyout, but a equity position. But at the same time, they may not just be going for equity, they could be going for cash flow that supports a substantial lifestyle where you can sit around and you think about it, you got $10,000 coming in extra a month or $20,000 coming in extra a month, or some of these individuals are going to have, even if they took a salary of $100,000 a year, that's a good feather in your nest when you're 50 years old or 60 years old, and you're sitting on the board with 30 other, what is this, four other people, and you all are dividing up a company of four other people with a co GP, depending on how many people, and they're looking to raise at least about $10 million. They want seasoned investors. They want anybody holding anywhere from $1 million to $10 million. They rather just get out of the way with one investor. But sometimes even these guys still, they know the leverage that somebody can create, depending on how sophisticated they're able to go in a contract and things of that nature. So uh, that was that. It was interesting company, good conversation with one of the managing partners. They're definitely going in and doing what is this, AI driven technology business model. They talked about having data points that they have. So once again, you're seeing technology be integrated into real estate. So they're talking about data touch points that are able to identify touch points in certain markets that are uh, once again, data touch points in certain markets. They have all these algos. You're seeing these companies now have algos, uh, that they're pretty much gonna go in. We're gonna create an algorithm, and we're gonna find out where these touch points the most dense at. And they're in those major cities. When you look at even their pitch right here, investor pitch, they're talking Nevada, they're talking Vegas, they're talking Phoenix, they're talking Dallas, they're talking Austin, they're talking San Antonio, they're talking Houston, they're talking Kansas City, they're talking Indianapolis, they're talking Columbus, Ohio, they're talking Raleigh, North Carolina, they're talking Charlotte, North Carolina, they're talking Columbus, South Carolina, they're talking Atlanta, Georgia, they're talking Orlando, they're talking Tampa, St. Pete. So, these companies have these touch points in these markets that they're very familiar with when it comes to where they think good markets are happening, whether that's for real estate. Once again, they have these algos. They have all these different pieces of information that they're utilizing to say that we can give you back. Once again, if the managing partner is taking those salaries, these guys are coming in from more of an investor level, not just from a shareholder level. So definitely look at it from a different perspective. When we talk about another company, this is a company. Once again, you see these tech companies, and they're pushing really, really hard. And what can you say to these tech companies? I mean, they literally, since we could say the 70s, we could say the 80s, we could say the 90s, and now after 2000, if you don't raise a billion, you're not a unicorn. So unicorns are billions. They've just continued to suck capital into the development of more technology. So you'll see these companies push for a STEM program where there's a development in the technology, science, engineering, technology, mathematics. That is their market. Technology is science, engineering, technology, mathematics. And so, since we see that, we see companies now that are just pretty much popping up as a university. They're popping up as a university. They're actually selling shares of their university to pretty much sponsor students so students can get an education for free, but the students actually are going to pay back the money, 10% of their income for 4 years. So there's zero tuition up front for the university. The company has a income sharing agreement, and they're making their students pay 10% if they get the education and they get hired in a tech company, and they have to make more than $40,000. So they're giving you A guaranteed salary. They're telling you, look, we're gonna educate you for free. They say their education is about 4 months. So you got a 4 month education. They've already showed placement of students. Uh, when you look at this type of company, this company is offering $36 million of their company. They're also giving out half of a warrant in one unit, and the minimum investment was 1,000. This company is actually has really good publicity. They do have different classes of shares of stock. Early right now. Could it be a tchotchke? Most likely not. This is one of those companies. They're looking for that 36 million. Um, Bottom line. But as you can see, that's not a billion. They're looking for 36 million. They think that they can take this to $1 billion company. Who doesn't want to take their company to $1 billion company? Um, who doesn't? So they're actually placing people in. Here we go. Once again, high net worth investor conversation. They're placing students in security. They're placing them in uh, cloud security, blockchain security, red team, blue team training, uh, application security, penetration testing, cybersecurity awareness training, AR, VR, immersive training. So once again, the company supposedly has the background to train people in full stack network security, cybersecurity specialist. Um, so these people are. It's not like they're not winning. They've actually got people placed at. If we said some of these company names, you pretty much know. Okay, well, this company is already doing their job. Correct. This company is already doing their job. But you don't get access to companies like this unless you're in the high net worth investor environment, which was interesting to say the least that they were there. Tech play, university play. Did they go foundation? Did they go foundation in the respect that they make money giving it away? Are they enticing their clients? Maybe they're doing it on the up and up. It looks pretty good right now. Do they have the relationships? Sure. They definitely have the relationships. They have great public visibility. This company, not to say that they're first to the market, but they are already creating great public publicity, and they obviously have hardworking founders, managers that are building the company. Well, not from scratch, but pretty much from scratch, and have created great relationships already with major companies. So let's look here. We got another real estate play. Real estate plays. Where do you want to go? You know, People keep talking about real estate, real estate. Austin, Orlando, Phoenix, Houston, Raleigh, Charlotte, Dallas, San Antonio, Las Vegas, Nashville, Atlanta, Seattle, Palm Beach, Jacksonville, Washington, Tampa, Salt Lake City, Denver, Tucson, Arizona, and Columbus, most likely South Carolina. So once again, you see a lot of REITs, you see a lot of public real estate investment trusts, companies that are pretty much all entrenched in the same markets, for whether it's real estate or otherwise. You're seeing these companies transition into these markets. So they're leaving the middle of nowhere where if you're living there, they're not investing in your market. The money's not there. The money's going to a specific market. So as you can see, that's how that would go. Oh, we actually have, well, usually when you're in the high net worth investor environment, you see what we see right here, which is a insurance fund. You see a lot of major insurance funds um, that are trading um, people's money. Um, and so we're going to go ahead and read out what this company is actually holding. When it comes to their portfolio, this is once again an insurance fund. They're looking for a $250,000 minimum investment. They're looking for monthly subscriptions. Uh, they do 1035 exchanges. If you don't know what that is, you can go look that up. Uh, and so we're going to talk about uh, the fund and what their diversification percentage is. So this fund actually says that they're holding cash and cash equivalents, which is 71% of their portfolio, which is interesting to hear. You know, when you think about it, ladies and gentlemen, that literally means they're holding hard cash. That's not invested capital. So we're going to keep going because for you to say you're holding hard cash and cash equivalent of 71% of your portfolio, that means you're risking less than 25%. We'll continue. They're doing in consumer cyclicals. Those are your discretionary stocks, products that people buy on a daily basis, whether it's deodorant, whether it's toothpaste, consumer cyclicals, clothes, consumer cyclicals, things of that nature. You all are familiar with what will be considered cyclical items, things that people don't have to buy, but they buy. It's not a defensive, but some people would try to go without those things if they can. But nevertheless, those are cyclical products. Uh, the fund is also 3.6% diversified in industrial, 3.2 in real estate, 11% in technology, and 1.9 in telecommunications. So when people say, "Oh, well, I'm going to go look at this company and I'm going to look at returns," ladies and gentlemen, you're only as good as the deals that you're looking at. So many people came to the vault this past week and say, "Well, what do you think about this deal, Trust Christian in the vault? What do you think about this deal? Somebody's offering me this. What do you think about this deal?" Well, let's think about this. Somebody's offering a deal. The biggest thing is just looking at deals. We see so many so-called investors that are not looking at enough deals. How do you increase your deal flow? You got to get around people that have deals. So you can either hear whether they have good deals or bad deals for you or for other investors that you're associating with. We actually got a chance to see a pharmacy company that is delivering to underserved, what is this? Underserved areas. Hmm. So here we go. Here's the sales pitch. They're going to have a pharmacy with a patented technology and an AI that delivers a faster, smoother delivery of compound ready use medications. They have a trusted, patented, protected technology and they have hospital partnerships. Ooh, that might be their way in. So what's the opportunity? We're going to see how much they're asking for. Alrighty. What is this company asking for? Well, we got a chance to meet the quote unquote founder and their objective. Listen to this type of conversation. A safe 8 million with a 25 million post money valuation. Now, the average person doesn't know what was said there because they don't know. But if you think that because you get $8 million, you're going to be able to give someone an exit of 25 million post valuation. What is this? The round of objection is to get equipment, facility construction, product development, licensing. They haven't even got the licenses yet. Are you willing to sit in an investment and wait for the licenses to get signed off on? Compliance. These are the things you're thinking about when you sit there in a high net worth investor environment and you're thinking about investing and you're thinking about those things. Oh, I'm gonna invest in this company because they actually are gonna get people around and get their products faster to their house or whatever it is. Sure they are. Now, listen to what they have now coming. The virtual CEO. Do you ready? Do you have a virtual CEO for your company? Do you have a virtual CEO for your family? Do you have a virtual CEO? What is a virtual CEO, Trust Christian Vault? Well, there's a growing trend among business operators that consist of a team of professionals who will rather work in silos, collaborate together, create a seamless and holistic management experience facilitated through a well-defined governance structure and process. We're going to see. We're going to see how that virtual CEO stuff plays out for your goal and your dream. Alrighty. Going over to some other business deals. Wow, you got a lot of asset management, estate planning, client services. These people are actually trying to go IPO. What do they focus on? Sell a property, wealth transfer for family and other assets, divorce settlement, trust distributions. These companies are dealing with planning services, insurance services, corporate executive services. Right. So they're going to tell you, hey, we're tapping into $1 billion market. So guess what? If you got $100 million, the $3 billion, you're considered a small boutique firm. If you have over $1 trillion, you're considered a large global firm. Alrighty. But this company somehow is going to meet the middle ground, which is the $26 billion and over. So they're going to jump right in between the 3 billion and the 1 trillion. Well, let's see what they say they're focusing on. Values driven culture, collaboration, trust, listening, leveraging world class firms' capabilities. So they're not maybe insourcing everything, maybe they're outsourcing. Leadership and asset management, due diligence. They're helping you with due diligence, wealth transfer. That means you got to make sure you get past those things. And estate planning. Every family's different. Well, they say they got over 1,000 advisors. Ooh. 1,000 advisors to 7 billion people. 1,000 advisors to 700,000 people that are in the upper 1%. Do you want to go, not 700,000, let's go less than a billion. The passionate advocates for their clients, their families, legacy, transparency, and process with the fees. You already know, here come the fees. The fees. Hey, we're not going to charge fees. We're going to minimize our fees. Yeah, they're trying to get pre-IP. If your company has so much money up front, this is what happens, ladies and gentlemen. And this is something we saw in the high net worth investor environment while we were sitting there. If you don't put your money up, how can you expect someone else to put your money up in the fund? See, this is the cup of the tea of the day. It's the straight BS nowadays in the straight public market over the internet. Everybody says, "Oh, go get OPM, go get OPM, go get OPM." First of all, OPM comes from some level of you showing face, whether that you can show that you can manage good, that you can manage that good, or that you have capital already. And so when we talk about that, when we talk about OPM, so many people are saying, oh, you got to get OPM, but they don't have the money themselves. So what we see in the high net worth investor environment is big bank tank little bank. There is no way you can say, well, I'm going to go out and just go get OPM and I don't have the money to actually be invested. First of all, are you aware of what the angels are saying? Are you aware of what the VCs are saying? Are you aware of what the hedge funds are saying? Are you aware of what the banks are saying? They're not taking less than 60-40 deals. They're not taking less than that. When they come into a company, they're traditionally looking to either take over management or take over the money so they can say they're writing the rules because they have the biggest investment in the company financially stake wise. So they have either more board seats or they have more capital in the business. So if you're in the venture and you put the sweat equity, but you value it now based off of equity, I mean, based off of cash flow, and this is the money that they're giving you, that's what these companies are coming in for. They're coming in for capital infusion. They're coming in for management and tightening up. That's what they're coming in for. OPM doesn't just come in with the money. It comes in with sometimes management. It doesn't always come in with that, and you will hope that you get the management. What do you mean? You're going to be gobbled up by a $1 billion fund that can give you the management to grow that company to maybe, if you want to do it, to 10 million, 100 million, and beyond. That's what the $1 billion angel and VC usually does, hedge fund usually does. But those people in the hedge fund, in the VC, in the angel position that are giving people these millions of dollars, guess what? They're the largest stakeholder in their fund. Y'all don't want to hear that. But when our mentors are sitting there talking to me and sitting there talking to our other trustees and saying, look, you got to have 60% of your cash in the fund. You got to get ready to sell the fund, but you can't take money out the fund. You got to leave money in the fund. You got to, whatever you put in the fund, you got to grow in the fund. You can't take money out the fund because investors will take money out the fund. If you take money out the fund, investors will take money out the fund. We're not saying that you don't pay dividends. What we're saying is if you take money out the fund, the investors will take money out the fund. And that's why you see the angels, the hedge funds, their business model is structured differently than somebody just going out saying, oh, we're just going to try to go and get some OPM. Because the other investors at that level that are looking down to give capital and invest it, they're looking for a stake in the game. They're looking for a stake in the game. They're looking to have a dog that can hunt. They're putting their money to work. They're putting their money to work. So they're putting their money to work. And people say, oh, go get OPM. But the hedge funds and the angels, they had to build up their capital. And that's why they're sitting in the position they're in. Is because they have the most money in their business models. When you look at those founders that we talked about, some of those ventures that we talked about, that we saw, literally these people are the most invested so far in their venture, and that's good. That's what they're looking for when they're putting out capital in the high net worth investor environment. They're looking to see how invested are you in your venture. How vested are you in your venture? That's what the high net worth investors want to know. How vested are you in your venture? How much time have you put in? How much money have you put in? How much revenue have you got out of it? They all said they wanted to see your grit as the founder. They didn't say they wanted to see your intelligence. They didn't want to see your education. Oh no, the myth of education is still upon us for the day. We still got the ones that have the business degrees, the ones that have the master's degrees that don't have a business can go on the internet and create a marketing platform, a marketing tool, but the ones that are actually building businesses with products, they have to build AI. They have to build technology. They're not all computer they're not all BSs and far or BAs. They don't all have degrees. Some of these founders don't have degrees. Quite a few of them don't, especially when you talk about the tech space. Appreciate Delaware for tuning in live, listen, replay. Always appreciate Delaware for tuning in live, listen, replay. Always appreciate Carrollton, Ohio for tuning in live, listen, replay. Got quite a few people out there listening live, listening to replay. Why do y'all think we shout out the cities? Why do y'all think we always comment on that? So y'all can hear the touch points of where in America or in the world people are listening from. Maybe you might want to visit there, might see the market. Maybe they're listening for a reason. Maybe they're trustees. Maybe they're not. But the point being is that they're in a market that maybe you might Google and say, okay, what's going on there? Appreciate everybody for tuning in live, listen, replay. We definitely want to thank everybody for tuning in live, listen, replay. We've seen a lot of good things at the investor conference. As you can see, their investor scope is actually it was very narrow out of all conferences recent. Of course, if you're going to fintech, then that's different. But if you're going to just general capital allocation, where's capital being allocated nowadays, and where's capital being allocated going into the new coming period. When you see a lot of the high net worth investors, a lot of them are looking to do their own investments nowadays. So you don't see it'd be different when you go to high net worth investor conference and it's just banks. But when you see high net worth investors, which are many more than the banks, then you're and they're sitting on 30 million, they're sitting on 50 million, they're sitting on 100 million, they're sitting on $1 billion plus. They're looking to do direct investments. So they're looking for deals. And that's why it's just so important to go into those environments. Because what if you had, properties that you could either sell off to a bank, sell off to a fund real quick? I mean, we've had trustees. We know people that they literally acquire properties with hedge funds. They help funds acquire properties and sell properties to funds. Uh, so there is a diversification when you are talking about, can you get deals done? People say, oh, I need the money, I need the money. You're right. If you need the money, you got to go to the high net worth investor environments. Oh, I don't know if my deal is structured properly. Well, that's going to be the problem. Are you going to go out, get the prior education to go and pitch them? But guess what? When you go to the high net worth investor environment, it's not that you're shooting yourself in the foot. First of all, if you got a deal, you got a deal. Now, if you got some grit, you're willing to hear a high net worth investor tell you your deal's trash. Come back to me when you got a better deal. But oh no no, people's self-image nowadays in the investor pitch market. Oh man, I don't have a deal anymore, or I don't want to pitch a deal. I don't want to go get a better deal. What do you think they're looking at? Deals. What should you be looking at? Deals. That's how you get good at picking deals. It's by looking at good deals, bad deals. But oh no, no, I'm not going to go back to the high net worth investor environment because, I didn't have a good one liner. I didn't memorize it. I stuttered. I didn't even know who to talk to. I didn't know where to start. I just seen people's name on the badge. I didn't know what to say. I didn't approach anybody. I just went and I saw. I heard them talking about the different investments that they were making. No. Okay. Did you hear deals then? Investments that they're making are deals that they're doing. So you get to hear the deals that they're doing. That's the difference. I'm hearing these deals at 30,000 feet now. I'm hearing these deals at 50,000 feet. That's where you're really hearing them from. You're hearing deals from 50,000 feet and up. Those are deals. You got to come in with $250,000. Do you even plan to make that? Do you even plan to have that saved up for your retirement? What are you talking about? How are you going to do a deal for $250,000 if you don't even have that saved up right now? And what are you saying? You're going to risk it all on one deal? Not at all. So that's the deal. That's the difference. So it's good to hear the deals. The self-image has to grow to hear the deals. Maybe not to do the $100 million deals, the $250,000 deals, but you actually could see that there were deals that were actually less than that in this environment actually this time. Do they want you to be an accredited investor? Sure, they want you to be an accredited investor. Sure. But what happens when you're not an accredited investor and you're in the environment? Aren't you going to grow to that position? Appreciate everybody for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listen, replay. We got New Jersey tuning in live, listen, to replay. Appreciate you, New Jersey, for tuning in live, listen, to replay. Feel free to reach out, Christian at trustchristian.com. Once again, that's Christian at trustchristian.com. Look forward to hearing from you. Christian at trustchristian.com. Enjoy the rest of your day.